Hey guys, okay, so today we're going to be talking about cryptocurrency. Does your small business use cryptocurrency yet? Or as an individual, have you invested using cryptocurrency? I personally haven't, but it's becoming a big thing, especially in our industry for us tax preparers because it's so new. And of course, the IRS, being like they are, they're a little bit slow trying to catch up, but they are now. And so they're really looking at these transactions now. So wanted to kind of hit on some topics, some highlights on how these transactions are being looked at and go from there. So before we get into that, be sure to like the video and subscribe to my channel if you haven't already, and hit that bell notification so that you can be on top of all the videos I put up to help you reduce your taxes for your business. So cryptocurrencies have gone mainstream. For example, you can use Bitcoin to buy far more than you think you could. Just try Googling, what can I buy with Bitcoin? You will get more than 350,000 hits. But using cryptocurrency has federal income tax implications that may surprise you. So with the price of Bitcoin having gone through the roof before its recent decline, and with increasing acceptance of Bitcoin and other cryptocurrencies as forms of payment, the tax implications of using cryptocurrencies are a hot button issue for the IRS right now. They're trying to catch up and they're scrambling to make sure that they're getting all their tax revenue off of these transactions. So the 2020 version of the individual Form 1040 tax return, the one you recently filed or going to file soon, we're here in August and your extension due date's October 15th. It asks whether you received, sold, sent, exchanged, or otherwise acquired at any time during the year any financial interest in virtual currency. It's an actual checkbox we have to check. And if you did, you're supposed to check the yes box. The fact that this question appears on page 1 of the 1040, right below the lines for supplying your taxpayer information, such as your name and address, indicates that the IRS is getting serious about enforcing compliance with the tax rules that have to do with these cryptocurrencies, so fair warning. The 2020 Form 1040 instructions clarify that virtual currency transactions for which you should check the yes box include the receipt or transfer of virtual currency for free without having to pay, the exchange of virtual currency for goods and services, the sale of virtual currency, the exchange of virtual currency for other property, and the disposition or sale of a financial interest in virtual currency. So to arrive at the federal income tax results of a cryptocurrency transaction, the first step is to calculate the fair market value, measured in US dollars, of the cryptocurrency on the date you receive it and on the date you use it to pay for something. So the fair market value, what it's worth on those days, is the dollar amount you use. So when you exchange cryptocurrency for other property, including dollars, a different cryptocurrency, services, or whatever, you must recognize a taxable gain or loss, just as you do when you make a stock sale with your brokerage account, like at Edward Jones or somewhere. You'll have a taxable gain if the fair market value of what you receive exceeds your basis in the cryptocurrency that you exchanged. And you'll have a taxable loss if the fair market value of what you receive is less than your basis in that cryptocurrency. So it's hard to imagine that a cryptocurrency holding will be classified for income tax purposes other than a capital asset, even if you use it to conduct business or personal transactions, as opposed to holding it for investment. Therefore, the taxable gain or loss from exchanging these cryptocurrencies will either be a short-term capital gain if it's held for less than a year, or a long-term capital gain if you hold it for more than a year. So example, just to say you use Bitcoin to buy tax-deductible supplies for your business. On the date of the purchase, the Bitcoins are worth $55,000 each. So you have a business deduction of $55,000. But there's another piece to this transaction, the tax gain or loss from holding the Bitcoin and then spending it. So say you bought that Bitcoin in January of this year for only $31,000. You have a $24,000 taxable gain from appreciation in the value of that Bitcoin, because now it's worth $55,000 and you're getting a tax deduction for that. So that $24,000 gain is a short-term capital gain, because you did not hold that Bitcoin for more than a year. So detailed records are essential for compliance in this issue. So your records to keep on any of these type of transactions include the date when you received the cryptocurrency, the fair market value of that cryptocurrency on that date of receipt, the fair market value on the date you exchanged it for whatever, if it's dollars or supplies or whatever, the cryptocurrency trading exchange that you used to determine the fair market value, and your purpose for holding the currency. You know, was it business use or for investment purposes or for personal use? So as you can see, you know, Bitcoin and cryptocurrency, virtual currency is very popular right now, but you have tax implications that go along with that you need to be aware of, and you need to be keeping very, very good records. So I hope this opened your eyes to the intricacies of dealing with this new type of currency. It's not good or bad, it's just you got to be responsible, and especially as a business owner, if you're using it in your business, you have to document. Keep all of these records that I just mentioned. So leave a comment below if you have questions, or if you have another video topic you want covered in future videos. Also look in the description for helpful links and resources that I provide, and be sure and subscribe to my channel if you haven't already.